to another episode of Coin Edition. I'm Cristiano Ariston Anthony, your host for today, and I've got with me a special guest on our show, and he's Nikhil Joshi. He's the CEO of EMURGO. Welcome, Nikhil. How do you feel to be part of Coin Edition's interview today?
Thank you very much for having me, Cristiano. It's a real pleasure to be here. I think this is the first interview I'm doing like this, so nervous yet excited.
I know. All right. Can you give us a small introduction about yourself, how you got into the CEO position, and also a small intro about what this project called EMURGO is all about?
Yeah, sure. So my background is over 20 years in traditional finance. So I left uni, and more out of laziness than deliberate design, I trained to become and qualified as a chartered accountant in London.
Okay.
That's not really my background. I'm more of a arty type person, but as I say, bit of a laziness decision, which I won't go into. But after I qualified as a chartered accountant, as was the case in the early 2000s, most people sort of then jumped into banking or private equity because that's where there was more money to be made. Right. And I joined Barclays in London in 2004, right. and then stayed with them till the back end of 2019. I was initially, well, half of that time was in London, and the latter half of that brought me to Singapore, where I looked after certain activity for the region. And then towards the back end of that stint, I was increasingly bored, quite frankly, and wanted to find something else to do. And I just couldn't work it out. So I started putting my hand up for all sorts of things that were, should we say, a little bit left field. And one of those initiatives introduced me to blockchain, and that was probably around 2017 or so. And so that piqued my interest, and I didn't get it for ages, if I'm honest, right? I was like really sort of banging my head up against the wall, and then there was kind of a penny drop moment, and I was like, okay, I see where this is going. And so I was with a startup initially looking at using a blockchain for trade and trade finance type of problem statements, but wasn't particularly keen on that. And so spent a bit of time exploring opportunities within Singapore, literally walking up and down streets, figuring out who's who and what do they do. And that was really interesting to get just a real appreciation of the spectrum of how this technology can be used. And as part of that process, I met Ken, who is my boss, who is the CEO of EMURGO. Okay. And then approximately 22 months ago, I landed here in EMURGO. My role is as the COO. And what that means is that I work with Ken to establish what our strategic game plan is. And then it's up to me to ensure that we actually execute on that. So that's my background. Coming to EMURGO specifically, EMURGO is a co-founding entity of the Cardano blockchain. Right. So from the outset, Cardano has been built with a view, when I say built, I'm referring here to the technology and ecosystem, has been established in a way to put a focus on decentralization. So if you look at other layer ones, typically there's one foundation and they do the whole lot. Right. Here we have three entities initially that were looking at, say, the R&D side of the blockchain, promoting the ecosystem. And then EMURGO specifically has a mandate to facilitate commercial adoption of Cardano. And so what we're doing there is either working with projects that are building on Cardano today to see how we can establish or monetize some kind of commercial opportunity. Right. We're looking to work with other layer ones and twos to see if we can enhance the Cardano ecosystem by promoting some level of interoperability. And then lastly, we also want to go out and talk to, should we call them Web 2 or TradFi type of players, and say, hey, if you're interested in working on blockchain for a given opportunity or problem statement, let us help you with that. And the last piece is then we are very much interested in bringing external capital into the ecosystem.
Right.
And so we'll work with all various types of be they VCs or CVCs or other investors as well, to try and educate them on what is Cardano as a tech stack, what is Cardano as an ecosystem, and shape their thinking so they can make an informed decision on whether they want to join in or not.
Right, brilliant, brilliant. So recently you had some strategic a partnership with GSR, which is the global cryptocurrency trading firm and liquidity provider. So what does this partnership mean to you, and how does it kind of give you the edge?
Yeah, so I mean, we're super stoked about this this relationship with GSR. We see it as being fundamentally strategic for us and fundamentally very important for the Cardano ecosystem. This is kind of touches on the earlier point, right, where we want to enhance the Cardano ecosystem. We want to bring people who are not in Cardano, not even in blockchain necessarily, to come and at least learn about what's going on over here. And so working with someone like GSR, which is a very well-established, a very reputable and regulated digital asset market maker, really lends a hand to demonstrating integrity and credibility and real commercial substance, right, to what we're collectively trying to achieve within Cardano. GSR is the first market maker to have received a digital payment token service license from the regulator here, the MAS. So that's great news for them, and we're very fortunate and very proud that we're able to announce this strategic relationship, just off the back of their amazing announcement of them having secured that license. In more practical terms, right, this just allows deeper liquidity, provisioning and market making for all projects that are building on Cardano on the tech stack. We can work with them to identify investment opportunities within Cardano. So again, that idea of bringing external capital into the ecosystem will they have an excellent network, and we'd be looking to leverage that. So there's quid pro quo on both sides. And also we have an education offering within EMURGO, and so there's opportunity there to help simply educate organizations, educate individuals on, I guess, 101, what is blockchain? 2, why should you care? 3, well, what is the Cardano blockchain, and why might you use that for a given opportunity or problem statement?
All right. Yeah, go ahead.
Well, I was just gonna, so one more point was simply to sort of enforce that idea of working with traditional players, and GSR is very much a key stepping stone towards that. So you may well have seen other announcements we've made in recent weeks where we've partnered with Huawei, for example, right? So again, in the spirit of working with established Web 2 companies, what that allows us to do is lower the barrier, right, for developers and businesses to set up Cardano nodes via their marketplace. So it's facilitating bringing newcomers into our ecosystem. It decentralizes Cardano further, right? So if everyone's got their nodes built on, I won't mention any specific names, but we can probably think of the obvious ones. There's a little bit of a concentration risk there, should we say, right? And so this is simply about bringing more optionality for people who are building on Cardano and want to use the tech stack or engage in the ecosystem. That's all we're trying to do here, is bring optionality. And so this very much moves towards points towards further decentralizing ourselves, and all very much done in the spirit of supporting the development of the ecosystem.
Right, brilliant, brilliant. So, as far as cryptocurrencies and blockchain is concerned, regulation has been sometimes a stumbling block, I would say. So I wanted to talk about regulation when it comes to tokenization of assets. I mean RWAs for that
Yeah.
matter.
Sure, this is my favorite topic,
Yeah.
right? So just just to touch on my previous life
Right.
again a little bit. So a whole chunk of my time while I was in banking was actually spent working with regulators or advocacy on behalf of the bank with UK or European or indeed Asian regulators.
Right.
And there's even with that, should we say, traditional financial instrument suite, I find myself repeating a lot of the themes that came out during that time when I'm talking about crypto and blockchain here.
Right.
So thematically, we know that there is a lot of disparate and fragmented thinking across the globe from regulators around the potential, or perhaps in some cases, what is perceived to be the threat of blockchain. And so I think it's incumbent on us as an industry to do a bit of hand-holding. I don't think this is about winning an argument. I think this is about holding the hand, metaphorically, of regulators, of governments, to help them understand what is blockchain as a utility, and somehow help them understand that, okay, for public permissionless blockchains, the crypto piece and the blockchain piece have to go hand in hand. That's how you validate what's going on.
Right.
And yes, there is a value, a monetary value ascribed to that cryptocurrency. But what you're probably mostly concerned about is retail, more so than others, blowing themselves up by speculating on the value of that. And okay, that may well be a reasonable concern. But what shouldn't really happen is that you end up, and this is my favorite expression, throw the baby out with the bathwater, right? And so fine, solve for that bit, but that doesn't mean you kick the whole of blockchain and crypto into touch as hard as possible.
Sure.
And so I think there needs to be a whole lot of systematic and structured education across the globe at jurisdictional levels, at governmental levels, regulatory levels, to help facilitate that understanding. And it will take time, right? So I don't think this is something that's going to be solved by Monday morning, but we have to be appreciative of that. We have to appreciate that different jurisdictions will have a different incentive of how quickly they move on that learning journey. And in the interim, I think we just have to acknowledge that there will be an unlevel playing field, right? And you see this. You see, if I can describe it this way, like a migration away from the US to friendlier jurisdictions like the UAE, like Singapore and Hong Kong. And that's good, right, for those jurisdictions. But it's bad if there's a bit of a brain drain from certain other jurisdictions.
Yeah.
And on that point, and I'm here in Singapore, right? And so I feel like I can talk about this quite confidently being on the ground, but Singapore and Hong Kong both are being very much front-footed, right, in terms of how they think about this, and have much more of an open mindset in wanting to work with players in this space so they can educate themselves, right, rather than holding them at a distance and gesticulating in very threatening ways.
Right.
So I think it's going to take time to get there, but if I had to sort of label it thematically, it's about education. For tokenization itself, or real world assets, right? Actually, real world assets to me is a bit of a stepping stone to getting into, should we call it true crypto, digital assets, right? So I think sometimes the terminology can be conflated, and I do think that doesn't help the education piece. But for me, for example, right, my penny drop moment was when I had been involved back in the day in securitizations, and that was really just about packaging up real estate and then tranching the credit risk and selling it out the back door.
Right.
And it's a good method to diversify risk.
Mm-hmm.
And the penny drop moment for me was when I realized, okay, you can now put this in a token format and you can fractionalize it. So someone who's got, I don't know, $10 of investable assets, right, is now able to accrete their wealth by having something that's now issuable in that $10 format, right, i.e. a fractionalized token.
Sure.
As opposed to what happens today, which is it's just the domain of institutions, because the average ticket size will be, I don't know, whatever, $500,000, $1 million, that kind of thing. Right. So I think the direction of travel on the regulatory side is definitely positive east of Europe, right? And I think that's probably driven by a number of countries in this side of the world actually having true incentive to adopt this technology because they see what the upside is, right? So I think it'll be interesting to play. I know it's very frustrating because in a way, I'd rather know what the rules are so we can simply play rather than be left in this ambiguity where the goalposts keep changing a little bit.
Right. Brilliant. Brilliant. So, yeah. So, when you focus on the US, regulations and the banking sector, Elizabeth Warren, she's the senator, and the CEO of JP Morgan, Jamie Dimon. Okay, they were kind of like condemning crypto and saying that the only use case of crypto was for fraudulent activities, for say drug trafficking, for illegal activities. So since you are also from the banking sector and now you are into blockchain and crypto, I would like to have your opinion on this. What do you think about them? Are they kind of losing business in the banking sector? We are seeing the banking sector moving towards Web3. So what's your take on this?
So first of all, I think those kind of comments, right, that you alluded to are just, it's just headline grabbing politics, right? If they really believe that, then again, I defer to my earlier comment about the need for more education in the right way in the right places.
Right.
But to your question on how are the banks feeling? I mean, I think banks and the services that they've offered in the past don't necessarily afford them the differentiation that they had in the past, right? So you see, even 7-8 years ago, there was a lot of movement in the payment space. Nothing to do with blockchain or crypto, but just the people who figured out you can do payments and whatnot in a user friendlier and cheaper way. And so that was a big disruption. Macro environment with interest rates having been up until recently very, 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 very low, and now they're been moving up, and now they're going to move down again. All of that affects when a typical business banking model and its ability to make revenues. I think a lot of banks probably see the writing on the wall. I think that the way they have traditionally made money just doesn't exist, or certainly not to the same volume or quantum. And unfortunately, many banks, especially the tier ones and twos, I'd say, have been designed in a very archaic fashion, right? So you have back office employees in the thousands, right? And that's because they were very much focused on chasing that top line figure and didn't invest in their infrastructure with the profits that they made then. And so they now become just simply very unwieldy, high fixed cost businesses.
Right.
To the extent there is talk of adoption of tokenization or blockchain or crypto in some capacity, I'm a bit cynical. I think not all, but some banks will pay lip service to the idea of that thing because they recognize it as a bit of a buzzword or a narrative, right? Which helps themselves sell themselves as being perhaps a bit more front-footed when it comes to innovation. If I'm really blunt, I do see it simply as that, lip service. And once you scratch past what are they actually doing in this space, it isn't really anything that's moving the needle, because there isn't really that incentive to actually move the needle. Right. And again, I'm not talking about all banks. I'm talking about, you see this in pockets, and mainly in the higher end. By contrast, you have banks, in Southeast Asia who are really savvy, right? Really kind of recognize that they don't have to follow that well-trodden path that US and European banks have trodden out. They can leapfrog, right, by embracing this technology very quickly. So I think there is that lip service. I do think that over time, the merits of blockchain, be that on the one hand, something like Bitcoin, which ends up forming part of a corporate treasury, right? Or possibly other cryptocurrencies which have the inherent programmability in them, and they might end up being, forming part of a treasury, a part of someone's balance sheet, right?
Right.
Maybe not right now because it's also volatile, but that's certainly a feasible scenario over the long term. That there will be a certain embracing of that, right? Or indeed, the utility that blockchain brings, right? So again, the headlines tend to go to crypto and that whole kind of gambling, right, fraud. But the same noise was made when the internet came out, right? And that's okay. There is nefarious activity in all quarters, right? But this is the way to think about this, is that the blockchain is a technology stack. How do you wish to use that technology, right? And then people will use it for whatever purpose they need. And I think as that starts to become increasingly obvious, right? So putting something into a token format, which allows for quicker settlement, which improves liquidity, which enhances transparency, which gives certain security around the information that's on that blockchain. These are all positive things, right? And I think there will be a slow move, but it's not going to be a handbrake turn by the banks. It's going to be a tanker, moving steadily over time.
Yeah.
I think one part in there, like, which is a question that's probably, I don't know if I have a good answer for this one, but the question is, will there be a true embracing of public blockchain, right? Or will it be building things on Hyperledger Fabric or Corda, which is run by R3, right? In my mind, those things are essentially databases, right, as such. And so there is a form of centralization. Now, do you need decentralization in all instances? Maybe not, right? But I think, yeah, it's interesting to see how that one might play out.
Brilliant. So you were talking about some advantages of RWAs. So how about we focus on some disadvantages? What may happen, if our RWAs, kind of take over in the future? What are the downsides to it?
I'm not sure if I would characterize downsides as opposed to more like challenges to get mass adoption of tokens of real world assets, right? So at EMURGO, we have a tokenization platform. It's called Anzans. Essentially, we could tokenize whatever we want, right? That could be it could be fiat, it could be debt, equity, commodities, real estate, IP, right? That part, the technology part of tokenizing in of itself is not that difficult. Yes, you'll need to make certain tweaks and whatnot, but by and large, it's not that difficult. The difficult part here is how do you know that there's a demand for it? How do you give people access? And then how are you going to distribute, right? And so those are the three main challenges in my mind. So this year, clearly RWA tokenization it's a narrative of this bull cycle, right? And for me, yes, broadly, it is the right way to go ahead. But does that mean that every single, financial services player is now going to be tokenizing this year? No, I don't think so. But it will make some decent headway by the end of this year. But the problem or the challenge they've got to solve for is, okay, we talk about tokenization like it's already here, but most of the world, shall we say, doesn't know about it. So how do you create that demand from their point of view? How do you sort out access? And here, of course, you then start talking about, are we talking about retail? Are we talking about institutional level, right? Is it intuitive for retail to suddenly download a wallet and do everything you need to do to be able to hold a token in that wallet? Not necessarily. So education needs to be provided there.
Right.
At the institutional level, how do you get all of that plumbing and infrastructure in place so that the institutions can understand, do they want to custody themselves? Do they want to, outsource their custody? What else do they need to think about? And the distribution part is, how do you now create a marketplace, right? So if we were going to maybe something like equity markets, right? I mean, it's a very vanilla thing in traditional finance space, right? So could you simply leverage those existing distribution channels and marketplaces and simply swap physical equity for tokenized equity, right? It's a question, right? But then if you start talking about tokenizing something that's perhaps a bit more esoteric, like intellectual property, there isn't really a marketplace for that today, right? So you're creating something from scratch in order to facilitate that, right? Or other illiquid assets for which there isn't an obvious, I'll call it a vanilla way of establishing a market. Those are going to be some of the challenges, I think, to getting this to a level of mass adoption, right? However you want to define that.
Brilliant. So finally, where do you see EMURGO in 5 years? Talk about the partnerships that you may have, your enhancements to the blockchain, or anything that you've got for EMURGO.
Yeah. So in 5 years' time, we will have reached our 10th birthday. So that in of itself is just a bit of a milestone. Our roots are in Cardano for sure.
Right.
We have, at present, we operate a light wallet. We have headless architecture that institutions can, will white label it for them. They can plug and play off the back of that. We have our ability to tokenize as well, and our education offering. And what I would like to think is that one, through demonstrating credibility of using that existing set of products with either crypto native space or equally TradFi space, right? That we have demonstrated that our platform is absolutely fit for purpose, right? If not, the go-to platform in this space. We will have, on the other side, seen a better appreciation of what blockchain can do, and therefore that the market moves towards us as well at the same time. And so there's a much more we've moved from, say, business development to just outright sales. That's what I would like us to be in 5 years from now, right? Our education, I think, will just have to carry on, partly addressing what is the technology and how does it work, and if you're of a developer background, how do you learn to build on this tech? But equally going to non-technologists and saying, there's this thing called blockchain, there's this thing called Cardano, and you might want to think about how can you use that for a given problem statement or an opportunity, right? I think that increasingly all roads lead to interoperability, right? And so we're putting a concerted effort into promoting and encouraging that because ultimately the end user just wants cool stuff to happen, right? Very few people are interested in how the mechanics work. And I'm not to say that that's not important, it is, but you know, for a given audience, you know, that isn't the most important thing. So I want, you know, I would like for us to be a partner of choice across, and we'll have more products over the next few years, right? Really sort of focus on the finance stack, right? So be that borrowing, lending, speculation, hedging, these types of things, and that we would be a partner of choice for people to come and work with us to use our products and services. There is another lens here, which is that, and I touched on this, we're headquartered in Singapore. We very much see Asia and Africa as being our domain, right? I mean, it's a global business. We're digital, right? But sometimes things still need a human touch. They still need a human relationship, right? And so if folks from the US or from Europe, you know, want to come and play in Asia, for example, then I would like for us to be their partner of choice to say, sure, you know, more than happy to, you know, use our network, right, to help you achieve whatever goal is in mind, right? So that's where I see us being in 5 years' time.
Right. Well, I wish EMURGO all the very best, and I hope all your plans come true. And thank you for your time, Nikhil. And let's hope we meet again in another video. Thank you.
Thank you very much. It'll be a real pleasure talking to you. Much appreciated.
Thanks a lot.